So, Robert, you heard the discussion we were just having about what has been happening today. Were you encouraged by the rally that we saw today? Or did you also find it kind of a little bit lackluster?
Lackluster at best. To gap up is never a good thing on the indices from a technical perspective. And that's what markets did. Obviously, on the heels of positive news, very welcome news, but you're seeing the market just fade into the close. But, it's kind of disappointing because yesterday we had a great day. The advanced declines, extremely positive. It's a really good sign. Fundamentally speaking, if we're actually here, on the bottom area, sort of kind of, making our way through all this trading right now. But no, to see it fade at the close wasn't the most welcome sign.
So we know bottoms are a process, right? Everybody wants to call the bottom and sort of get famous for that. But what are you looking for? At least maybe some signs of positivity that investors can kind of hang their hats on.
Yeah, it's a good question. And we do anticipate it's possible for us to retest the bottom. Doesn't mean we're going to close below the 20%, which would signal a bull market or a bear market going from the bull to the bear. But we could test it intraday. I do see that playing out. But that would be a double bottom, if you will. That would be a positive sign, as you were asking, moving forward. Another positive sign is just the breadth of the market that we need to see internally. Markets have sort of advanced decline, so majority, 95, 96% of the stock market, participants up that day, but accelerate into the end of the market close is always a positive. And obviously, you always want to see the weekends. Going into a Friday, good or bad news, you still want to see solid market closes based upon that. We could have, I think what markets are doing is pricing in all the unknowns, which we don't know. They're pricing in all the negative news. And as we saw yesterday, it could take a tweet, it could take a handshake, things could change, and we could be up another, 1, 2 to 5 to 10% overnight. I don't know if that's healthy, but that's where we are.
It's hard to, yeah. Although then you heard Scott Bessent saying stuff like it's going to take 2 to 3 years to negotiate something with China. So who the heck knows? But in any case, when you're looking at this kind of backdrop, I want to talk about some of the stocks that you like. You are the second person to come on today to be focusing on Amazon, although the other one was a very short-term trade looking at potential downside around earnings. Amazon's actually a stock that you like here. As we are looking at a potential lower spending environment, why do you think Amazon will be able to navigate that?
Amazon has turned their business around 3-4 years ago. The AWS turnaround is now in full gear. Obviously, they're the e-commerce giant. That's what your previous guest was worried about, is the sensitivity to the consumer. There is always that. But let's not forget all the investment in the AI upside. They've really turned their business around, and they're really geared to scale for the future. And oh, by the way, the forward PE on a valuation standpoint for Amazon takes us back to 2009. So right now, Amazon, historically speaking, based upon their earnings and where they're situated, is looking very attractive. Obviously, we could have earnings, and a gap down here and there, but dollar cost average your way into Amazon, and you have a long-term perspective, and you'll be a happy camper.
I know one of the other names you're also looking at is Berkshire Hathaway. Is it just because of that massive war chest that Warren Buffett has built up over the years? They're sitting a lot prettier than many other companies with all that cash on the balance sheet.
Yeah, you're right. The war chest of cash is king, and Warren Buffett is always the most patient investor that we've ever seen. And, over his course of his career, the market just keeps coming to him. He doesn't chase it. And oh, by the way, one of the top picks that Warren Buffett just invested in was Amazon. So if you want, for investors right now, if they're curious as to what to do in this market, I would say pick up some Berkshire Hathaway. Let Warren Buffett do the investing for you. He's had the history of success, and he's got cash to basically make the deals happen. So, if you don't know where the direction the market's going to go, but you're not invested in the market, you have a long-term view, have Uncle Warren lead the way for you.
All right, how about Netflix? Do you think they're going to hit that $1 trillion number that they were talking about?
It's definitely possible. Again, we like all the businesses that we're talking about because they're leaders in their own respective industries. The subscriber growth is there, pricing power, evolution, advertising. It's interesting, the last earnings call is 55% of the new subs that were added we're choosing the advertising model. So that's just another revenue generator to the bottom line that could help them get to that 1 trillion sooner than later.
Robert, thanks very much. Appreciate it.
Thank you.